Hello, everyone. Welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And I'm also on X. My name there is at Doug Pless. Just want to let everyone know that Bookmap is encouraging everyone to join Discord. There are a number of benefits. You do need to subscribe to Bookmap. There's a free subscription available. Once you subscribe, you will need to verify your account. Then you can fully participate in the Bookmap Discord chat and watch all the different streams of Bookmap Discord. And note there are some Discord-only streams like the future funded, recent funded trader webinar series. So please join Bookmap Discord. Also, to wrap up the year, there are a couple of ongoing sales. First of all, this is the final week of the MBO bundle sale. I believe that's going from Christmas to January 1st. And then finally, the Global Plus annual sale. And I'm not quite sure when that starts. According to Dan P., who lives in England, it starts on Boxing Day. So if anyone knows when Boxing Day is, this is when so you can just go to the bookmap.com website and check for the current promotions. Here are the key tenets to my approach for trading. This is the basis of my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly in the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And just like the S&P 500, when traders buy and sell, and the NASDAQ NQ futures contract is a derivative of NDX. And again, just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, setups can be taken with futures contracts, shares of stock, or options, depending on the way you like to trade and the asset that I'm talking about. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, oh boy, welcome, glad you're here. Hello, WRB, welcome, glad you're here as well. Yeah, pretty light today. Um, Too bad. Traders are missing very good trading today in a higher volatility environment, negative gamma environment. Here's my agenda for today, Monday, December 23rd. First of all, I want to go over news items, economic data, and events for the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. Hello, Umang. Sorry I'm about the pronunciation. Welcome, glad you're here as well. All right, let's start with news items, economic data, and events for the week. A very light week as far as economic data goes. So the only economic data release that's listed as high impact is the durable goods orders tomorrow at 8:30 a.m. Eastern Time. And of course, tomorrow is Christmas Eve. And the market closes at, I believe, stock and futures markets close at 1 p.m. Eastern Time. And of course, Wednesday is the Christmas holiday. All markets will be closed and then reopen on Thursday. And of course, I will not be streaming on Wednesday. So this is my only stream for the week. All right, let's move on to positional analysis. I'm going to start with the S&P 500. This is the ES futures and Bookmap. And before I take a closer look at this chart, I do want to look at a higher time frame first. This is SPX, a one-day chart, 1 year worth of data. Rally continues, multiple pullbacks along the way. And let's go to now a 1 hour chart. Again, this is Think or Swim, 1 hour chart, 30-day 1 hour chart, SPX, the underlying index. Let me point out a couple of key events. First of all, this was after the post-election rally, support around 58.50. And last Friday, SPX did break down below that level, but now is moving higher. All right, so those are the key events, and of course, this is the reaction after the FOMC announcement and press conference. And market has recovered a bit of that, moved down. Those are very large 1 hour bars. All right, let's take a look at levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is for this week. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from last Friday. Note, I do post those levels in Discord every day the evening before. So SPX trading within both of those ranges so far. All right, remember, Friday was the large options expiration, so there will be some moving around of levels, and usually it takes a few days for the new levels to stabilize. I'm talking about the Spotgamma levels. They're based on gamma-weighted open interest. So let's take a look at the current key daily levels. First of all, starting with the put wall. And there's a combo 1 level just above that at 59.01. The put wall is at 5,900. That's a strike with large net negative gamma that can be expected to act as support. Did its job today very well. Key for today is that put wall holding. And above that is the volatility trigger at 59.70. That's Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And note, SPX is trading below that level in a negative gamma environment, a very low stability. We'll take a closer look at both gamma and Vana in just a few minutes. All right, next level up is the absolute gamma strike at 6,000. That's strike with largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. And then finally, the call wall is at 6,055. And who can tell me why that level is significant? All right, I'll go ahead. It is the JP Morgan short call in the JP Morgan collar that expires at the end of the month. So JP Morgan, that fund, is short calls, market makers long calls, and hence the largest positive gamma at that strike. That level did move down from Friday. So again, they call wall the strike with largest net positive gamma, and that can be expected to act as resistance. And as price moves, if price moves up toward that level, it will certainly act as a magnet for price, with market makers trading with price up to that level. All right, shifts in levels for the S&P 500. For SPX and SPY, volatility triggers shifted lower, put walls shifted higher, call walls shifted lower, absolute gamma strikes shifted higher. So kind of a mixed picture for shifts in levels for the S&P 500. All right, let's wrap up our review of SPX with a 1-minute chart. So SPX broke above this downtrend that began on Friday around the middle of the day. The put wall held a support again, key for today, and now the S&P 500 is SPX rallying higher, heading up toward the volatility trigger. Let's take a quick look at a SPY chart. So that was a 1-minute chart for SPX. Let's take a quick look at SPY, see the levels in play for today. Here's the SPY put wall, 590. 594 is the zero gamma level. So price did break down below the put wall this morning. It did act as resistance. Little bit of consolidation there, and now SPY is trading pretty firmly above that put wall level, but still below the volatility trigger at 598. All right, back to Bookmap now. So key for today, again, the put wall, 5,900 holding. Earlier in the day, around the 590, 59.41 zero gamma level did act as resistance. There was a nice short setup this morning, but then of course the setup of the day is the put wall, the long at the put wall. Here's the SPY 590 put wall acting as resistance, then support. All right, note there is a difference in price between ES and SPX. Earlier today, it was around 63. Now it looks like it's maybe closer to 65. I'm using 64. So I'm showing the SPX 5,900 put wall at ES 5964. And that was about what it was at this reversal point just after 10 a.m. As we saw on the actual SPX chart, price did not actually touch that 5,900 level. All right, so that's the SP 500. Again, shifts and levels, volatility trigger lower, put wall higher, call wall lower, absolute gamma strike higher. All right, let's move on to Nasdaq, and we'll get to setups in just a few minutes. Nasdaq, this is the NQ futures and Bookmap, and support at this cluster of levels with the NDX 21,270 volatility trigger and the 21,275 absolute gamma strike call wall around that level acting as support. Nice trend break there. All right, let's take a look at the underlying index charts. Then we'll get back to the Bookmap chart. Go to QQQ. QQQ now trading above its volatility trigger, just like NDX. That level did act as resistance earlier today. Above that is the 521.0 gamma level. All right, so the volatility trigger resistance, then close to that level, acting as support. Let's take a look at NDX. And this is, zoom in on this price action for today. There's that cluster of levels that I mentioned. So for NDX, that's a combo level at 268, combo 1, 270 volatility trigger, and 275 absolute gamma strike call wall. That's right here. Price did break down below that level, but quickly recovered. It acted as support. Now NDX grinding higher. Oops. All right, back to Bookmap. So again, those levels acting as support, and a short setup earlier this morning. Resistance at the QQQ 520 absolute gamma strike volatility trigger that I mentioned before. All right, so those are the levels in play for the Nasdaq. It looks like now the 21,520 level is up above, maybe acting as resistance. All right, let's wrap up our positional analysis with, first of all, a view of gamma. We'll take a quick look at this. This is market maker's position on the gamma curve at the beginning of the day for the S&P 500, Nasdaq, Russell 2000. Note with the exception of NDX, all these numbers are negative, but less negative than Friday. Again, remember the large expiration. So some of that gamma, a lot of that negative gamma did expire on Friday. So still negative gamma today at the beginning of the day, but less negative than Friday. And again, a negative gamma environment. This indicates traders are long puts, market makers are short puts, and they have to trade with price to hedge their delta exposure. Oh boy asks, are the put wall, call wall, and volatility trigger for the month end or any other date? They change daily. So they're key daily levels. The put wall, call wall, volatility trigger, absolute gamma strike. So they're updated daily. Oh boy, I hope that helps. So again, they're based on, they change every day, or can change every day. All right, let's take a look at a current view of gamma now. Let's go to the Spotgamma trace tool, and this is showing gamma for today. Let's take a quick step back in time. Go to around the beginning of the day. We'll go to 9:40. Very somewhat neutral looking gamma. So the red areas are negative gamma, blue areas positive gamma. So according to this chart, somewhat neutral, but the key is the stability index at 1%. That's very, very low. That's as low as it gets, indicating very large moves in SPX. So this is for SPX. 1% stability index. So looking for wide range of movement today at the beginning of the day. Also notable is the large negative gamma down below the put wall at 5,900. So if price did break below that put wall, then the expectation would be for faster movement down through that negative gamma. But again, that put wall did hold, as we can see in stepping through time. Going back to the current time. Now, SPX approaching positive gamma that is centered at that 6,055 strike. All right, so that's the current state of gamma. Notice also the stability index has increased now to 35%, which is still, certainly on the low side, but it's better than, or indicating more stability than at the beginning of the day. All right, let's take a quick look at Vana. We have not looked at this at some time. This is just to indicate there has, with the higher implied volatility, a lot of put Vana fuel in the rally, in the tank for a rally. So what that chart is showing is market makers delta notional on the vertical axis, spot price for SPX. On the horizontal axis, there are two curves on this chart. The purple curve is what we want to take a look at. That shows how market makers delta notional in the vertical axis may change with changes in price and with implied volatility. So what that's just showing is if price drops, implied volatility increases, market makers delta notional will increase, and they'll have to sell futures to hedge their delta exposure. This is for SPX. And on the other hand, like what's happening now, let's go back and check that low of the day. Again, 5,900, just above the put wall. So let's find 5,900 on this chart. Right around there. So as price is increasing, implied volatility drops, market makers delta notional is decreasing, and they can buy back short futures to hedge their delta exposure. So put Vana fuel in the tank for a put Vana rally today. All right, so based on this, my thesis for the day was looking for high volatility and looking for the potential for this put Vana rally. And that began to play out as that 5,900 put wall support held. All right, let's move on now to execution. So I'm going to start with the S&P 500. And as always, I'm going to take a look at what options traders have been doing today. I'm going to look at the hero chart. And just a quick explanation. This is hero, hedging impact real-time options. The white line on this chart is price for SPX, and this is showing options trades and market maker hedging activity for the index components, SPX, SPY, XSP, ES futures, Orange line is for calls. A rising orange line indicates traders are buying calls, and market makers are selling calls. They have to buy futures to hedge their delta exposure when they buy calls, and the blue line is for puts. So that's the index signal. There's another signal that we can take a look at for the S&P 500, and that is the equity signal. Let's go ahead and move on to full screen here. So what this chart is showing, again, price for SPX and options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. So let's take a look at this chart. And really we'll focus on a couple of setups. First of all, let me actually zoom in just a little bit. And I'll talk about patterns as well, hero patterns. And I've got a really good example of some patterns in Tesla that we'll get to in just a minute. All right, so first of all, just after 10 a.m., note how the blue line and the orange line are moving the same direction. That is a continuation pattern. With the blue line, orange line moving the same direction. So traders are selling calls, buying puts, and market makers respond. They take the opposite side of those trades, and they respond by either selling stock or ES futures. And just after 10:10, as price was approaching the put wall, put buyers, reverse course, started selling puts, and then a few minutes later the call buyers came in. So a continuation pattern down, and Spotgamma has identified that pattern as a very strong continuation pattern. When both the blue line and orange line moving the same direction, that's a very strong directional signal. And then kind of a stop-start here. Traders stopped buying puts, started selling puts, taking advantage of the high implied volatility, also monetizing their puts. If they were long puts, that was a good opportunity to start selling those puts and taking profits. And then a few minutes later, they started buying calls, and price reversed higher. All right, so let's zoom out now. So now that continues. So the continuation pattern that really began with the test of the put wall, first of all with calls, then traders selling puts, then buying calls, and that continuation pattern continues to move higher. So next target in sight is the volatility trigger at 59.70. So let's go take a look at Bookmap now. Go back to ES. Let's zoom in just a bit. All right, let's take a look at a couple things. First of all, remember right around 10 a.m., the put line and the blue line, the put line and the call line, the blue line, orange line, moved down in the same direction. And that occurred. You really can't see it now. Because of the shading of the heat map did change a little bit. So first of all, let's note this trend break here. Then a reversal right around that level. Earlier this morning, this liquidity right here was a lot more visible. Right now, these limit sell orders shown here in the order book are kind of overwhelming that. Actually, I can scroll to the right a little bit and that'll darken up. So you can see how that darkens up now. So that reversal right at this trend break, as traders were buying puts and selling calls, that's right just before 10 a.m. Note at that time, large traders were selling with iceberg orders. That's shown by the following light blue line. Also, as the reversal happened, that was the market pulse price change, extreme, and then sell stop orders helped to fuel that move lower. But this was the one of the clues, the biggest clue in Bookmap here. Large traders selling with iceberg orders as price was actually moving down then up. So they were fading that move. High liquidity at that level. Traders buying puts and selling calls. Price reversed lower. All right, now let's move over to this reversal. All right, so here's a level that we expect to act as support, the put wall, and that's exactly what happened. Just above that, this combo 1 level at 59.01. Again, market pulse price change indicator indicating a low extreme. Price reverses higher as traders started selling puts. A few minutes later, they come in and start buying calls, and price moves higher. Note cumulative volume delta, that dark blue line, had been rising for quite some time, leveled off. 5,900 put wall holds, and price moves higher and continues to move higher with that continuation pattern in the hero of the S&P 500 equities chart. All right, so that's the S&P 500. Oh boy says the area you pointed on the spot charm, I assume you mean gamma, was not 6,055. It's much lower at 5075. Please go over it again. All right, let's take a look. So what I was pointing out, and correct me if I'm wrong, oh boy, let's go to trace. This is the level that I'm pointing at right here. Oh, you are right. That is 5975. Oh, yeah, you're right. 6,055 up here. Thank you very much. Oh boy, thank you for the correction. So 5975, just above the volatility trigger. $60.55 is up here. All right, thanks. All right, let's take a look at Nasdaq now. Let's zoom in a bit. All right, this is the Nasdaq hero signal, just like the index signal for the S&P 500. This is combining options trades, market maker hedging activity for NDX and QQQ. Strong continuation patterns down from the open. Blue line, orange line moving the same direction. A little bit of reversal, setting up a nice short right around 10 a.m. Another continuation pattern. And note, it did, this call line did act as a little bit of a lead there. Traders started selling calls, and then price reversed lower just a minute or two later as traders started buying puts. And then found support at that cluster of levels or just below it. And there's those, this is price for NDX, that cluster of levels. All right, back to Bookmap. Zoom in. So there's that 10 a.m. reversal lower. Right at the 520 absolute gamma strike volatility trigger. Also VWAP, light blue line. As traders were selling index calls and buying puts. Sell stop orders helping to fuel the move lower, as well as large traders selling with iceberg orders. Price reverses, market pulse price change indicator, extreme on the downside. Cumulative volume delta starts to rise as price reverses. Buy stop orders help to fuel the move higher, and then price makes a V bottom below those levels, then finds support. Breaks that downtrend line. Now continues higher. All right, back to Hero. All right, so more continuation pattern. Blue line, orange line begin moving the same direction again. Right around 1220, there was a little bit of a pullback. Put sellers came in again. Now call buyers. Price moves higher. Let's take a look at the other signal that we can take a look at for the Nasdaq. This is the Mag 7 signal showing options trades, market maker hedging activity for the stocks known as the Mag 7. Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Again, put sellers taking advantage of high volatility. Reversal just after right around 10:10. Call buyers come in a few minutes later, and just like the S&P 500. Traders continue to buy calls and sell puts. All right, let's take a look at some stocks. And I'm going to start with Tesla. Let's zoom in. All right, as I've mentioned, and I did post this in Discord, starting to look at Hero in terms of patterns, repeatable patterns, just like chart patterns, like a double bottom or head and shoulders or cup with handle or something like that. Repeatable patterns that you can infer or expect behavior based on the pattern. So in Tesla, and also note, I do plan on putting together a document with maybe a catalog of these patterns. And when that's ready, I will post it in Discord. So those of you who are watching in YouTube, if you want it, and this, hopefully I'll be able to do this by early January. I'll let you know when it's ready. Again, it will be posted in Discord. So for those of you are in YouTube, if you want to see this document when it's ready, you will need to join Bookmap Discord to get it. All right, let's zoom in on Tesla, see if we can identify some of these patterns. All right, so first of all, what I'm calling this is opening drive. Trader selling calls from the open. Opening drive, trader selling calls. We'll look at some other examples of a bullish opening drive in just a minute. Neo asked, how's the trace delta pressure looking on SPX while the price was around 5,900 put wall? Yeah, we'll take a look at that in just a minute. All right, so opening drive, trader selling calls. Price moves lower. So that was the first pattern. And that really went on till about here. So the first pattern, opening drive, trader selling calls. Price moves lower. Then a consolidation pattern. Up until about 10 o'clock. Then a continuation pattern. So opening drive, short, as trader sell calls. Then a consolidation. Price moves sideways as the orange line, blue line both move sideways. Then a continuation pattern down, bearish continuation pattern. All right, then a kind of a stop-start reversal. Traders start selling puts. A few minutes later, they start buying calls, leading to a continuation pattern. And note where Tesla reversed higher, right at the 417.50 hedge wall, put wall. So the call put sellers come in first, then the call buyers, and Tesla leads the charge higher. All right, continuation pattern up until about 11:20 or so, then a consolidation. So this is a pretty typical pattern after this. It could have been an opening drive higher up into one of three patterns. Here, this is a consolidation pattern. It could be a continuation pattern at a lower angle or a reversal pattern, but right now it's consolidation. All right, so let's go take a look at Tesla now and Bookmap. Back to Bookmap, go to Tesla. We'll zoom in a bit. All right, so here's that opening drive, pretty short. Good for about 5 points or so, depending on when you got in, maybe 6 or 7. Consolidation. And then continuation pattern lower. And here was the 417.50 hedge wall, put wall. Price did break down below that, but then reversed higher. Some aggressive buyers starting to come in. Sellers are exhausted. Small magenta volume dot. Bullish continuation pattern, then consolidation. Price can't quite make it up to that high liquidity at 435, as the options traders have taken their foot off the gas. So I guess that is kind of a topping pattern as well, and what I have been calling foot off the gas. All right, so that's Tesla, multiple patterns. Again, bearish continuation, consolidation, another bearish continuation, then a stop-start reversal, bullish continuation, and then a consolidation or topping pattern. All right, so that's Tesla. And let's take a look at AMD. AMD bullish, opening drive. Let's go take a look at Hero. And where's AMD? Classic pattern. Traders aggressively buying calls in the morning. And then this then becomes a continuation pattern with the blue line, orange line moving in the same direction. The flow alert that came in just a couple of minutes after the cash open. 125 key gamma strike hedge wall. Price did breach above that level. And then this is a reversal pattern. A peak pattern, call peak pattern. And that's another topping pattern. Could be a reversal, but in this case, call buyers, put sellers take the foot off the gas, and price is consolidating right around that 125 level. So a very bullish opening drive, then a continuation pattern, a call peak pattern, and then a consolidation or foot off the gas pattern. Let's go back to Bookmap. AMD. Very bullish opening drive. Call peak pattern. Just right around 126. And now consolidation, foot off the gas. All right, any thoughts, questions about taking a look at Hero in terms of these repeatable patterns? Let's take a look at Broadcom. Let's go to Hero, see if we can identify the patterns. Looks like mostly calls driving Broadcom. Aggressive call buyers at the open. Full alert, signaling significant options activity to get your attention. Opening drive, consolidation. Another bullish move with calls, then more consolidation. Call buyers definitely driving price today, but the put sellers are helping. Note that is shown by the positive delta notional there. Opening drive, consolidation, another bullish drive, then more consolidation, foot off the gas. Back to Bookmap. All right. Broadcom continues to grind higher. Back to Bookmap. All right, next stock, MicroStrategy. Let's see what options traders are doing. And pretty apparent from this move down, there were a lot of aggressive sellers, shown by all the magenta volume dots showing market buy minus sell. Also the sharply falling cumulative volume delta. Let's take a look at Hero, MicroStrategy. Mostly calls driving price today. Opening drive lower. Traders selling calls. Again, flow alert. little bit of consolidation as the call sellers slow down a bit. Now they've started selling calls again, and it looks like buying puts. So from zoom in just a bit. So maybe right now a continuation pattern, blue line, orange line moving the same direction. So I would be looking for a short in MicroStrategy, even though price is near the low of the day. Back to Bookmap. All right, so again, MicroStrategy near the low of the day. So I would be pretty cautious there. All right, those are all the stocks that I have. All right, let's go to back to the SP 500. And Neil wanted to take a look at trace delta. We can do that. Delta pressure. Let's zoom back to let's go back to about 1020, something like that. All right, this is what I have for trace delta pressure. The red area is showing that's market maker selling pressure. And it was pretty apparent that first short setup right around, what was that, 945? Yeah, that 945 trend break. Pretty apparent. I'm going to have to change the color. Selling pressure there. And then it really looks like somewhat of a neutral zone here. But SPX has definitely left the selling pressure. Hero's starting to rise. That's that purple line. Now let's step forward in time. Now, as we step forward in time, that blue buying support becomes more apparent. But at the time, it looked somewhat neutral to me. Really just looks like it had left the selling pressure zone at the time of that reversal. And the selling pressure up above has been retreating higher. All right, let's take a look at charm pressure for today. Oh boy is asking about a possible close for SPX. All right, so oh boy, as you pointed out, the 59.75 could be a very good candidate. That's the largest positive gamma on the board here. Let's go to charm pressure. So that's what's setting up for today. $59.75. Just above the hedge wall, the volatility creator at 59.70. Note the contour lines, kind of a vortex heading toward that zone between the blue buying support below and the red selling pressure above at that highest positive gamma strike. Neo, you're welcome. Very insightful comment here. When it was at approximately 5,900, it was on the edge, definitely. We took a look at all that negative gamma down below on both delta pressure and gamma environment. Also, the stability index was 1%. It was on the edge totally. It could make a big boom as well, but they held it back. Very, very good observation. That is exactly correct. It was definitely on the edge. And as I mentioned, if SPX broke below that level, there was a lot of negative gamma down below. Let's go back to trace gamma. And this is what Neo is talking about. Again, all this negative gamma down below 5,900. And price, the assumption is that price would move pretty sharply through that level. All right, so oh boy, again, that 59.75 looks like strong potential for today. Let's go back to Bookmap. I'm going to tone down the heat map a little bit. All right, so it looks like the 59.70 it is acting as resistance now. Let's see what options traders are doing. Let's go back to Hero. We'll go back to the SP 500. Multiple peaking patterns here. Call peak, call peak, call peak, call peak. Now traders are selling calls. So they keep selling calls at the 59.70 volatility trigger. All right, so if they keep on doing that, then 59.75 could be difficult today. All right, zooming in on this. So right now, on the very short time frame, the blue line, orange line are starting to move down. Check S&P equities. Also starting to turn down. Let's go back to Bookmap. So this is showing price below the volatility trigger. Let's check SP 500. Also showing price below 59.70. So that relationship has changed a little bit. Let me change my spreadsheet. So it looks like ES minus SPX is closer to 65 now. So I can just update my chart by adjusting my spreadsheet. This would have automatically updated in a minute. I just updated it now. So now you can see the correct index relationship to ES SPX. So price did not quite make it up to the volatility trigger at 59.70. Whoops. All right, back to Hero. All right, so again on the index signal, multiple call peak patterns. S&P equities really continue to grind higher. Charm pressure still showing potential pin target at the end of the day, 59.75. Next large positive gamma strike below that is the volatility trigger at 59.70. All right, last call for questions, comments. Any stocks you want me to take a look at? All right, everyone, I want to thank you very much for watching. Thanks for your questions and comments. Oh boy, thanks again for correcting me. I appreciate that. Everyone, have a very Merry Christmas, and I will see you next Monday. Thanks again. Bye.